Hello, my name is Robert Santos and I'm a managing member here at Mr. Deeds.
Today in this video we're going to cover passive investing versus active investing, talk about the differences between the two, and go over a case study to show you how both of those investment rules apply. So passive investing in regards to real estate is where you take a sum of money, you invest it into a project over a specified time period, and you receive an annualized return for that investment. At the end of that project, when they turn around and sell it, you'll get your initial investment back, plus any additional proceeds from that sale, assuming the property performed accordingly. Active investing is similar to passive investing in the sense that we invest our own money, which is typically 1 to 10% of the equity risk. But where we really get involved as the active investor is we do all the research needed to verify this property is going to perform accordingly. We do all the financial underwriting to ensure that it's viable in the sense of deriving the returns needed for our investors. Then we get the property under contract to go through the entire due diligence phase to work with attorneys, property managers, asset managers to ensure that information is accurate and lawful. We then close on a deal and come up with a master plan to understand how we're going to manage that property from an asset management standpoint and a property management standpoint, so that way that property performs over that whole period. So the case study I'm referring to is going to be a project that we acquired last August, and what we did is buy an operating motel in downtown Houston and convert it into multifamily. So as the active investor on this deal, we drove out to Houston to go do our own research, right, where we physically got to the location, verified that the asset was in its current condition as displayed on the actual brochure. We then had to get a little creative on what we thought we would do with that property. So the question is it better off served as a multifamily building or better off served as student housing? On a micro level, it's just an operating motel. But on a macro level, it's an operating motel that's right in the center of a lot of growth. We're taking a motel and converting it into multifamily. And then what we did is we got it under contract. So under contract is when we started going out to passive investors and raising the money. So this case study is a prime example of the involvement of the active investor and the involvement of the passive investor and how they work together to get a deal done. So as the active investor in this deal, we applied our 3-step proven process, which is research and financial analysis, due diligence, closing, and management of the asset. So if you're an accredited investor looking to invest in commercial real estate passively, I think there are 3 things you need to consider before you do so. How creative is a firm, how experienced is this firm, and how transparent are they? If you're interested to see how Mr. Deeds can help you build wealth through passive investing, simply book your free consultation today.